Hello everybody, it's a new week. Welcome back to Crypto Rosetta. Joe here on the Monday. What a week it was last week. Bitcoin getting above 50k. We are going to talk about it, have a look at the charts, have a look at the market right now. Just give my opinions. Of course, nothing's financial advice. I'm just making my best guess of what is going to happen next. Of course, if you've been a fan of the show, been watching regularly over the last few months, you'll know that I expected Bitcoin to get back into that 30k range, which it did, but it has gone much higher than I expected. So I've got to reassess the position of the charts, position of the markets right now, and try to make an opinion as best as I can for my own trading and my own potential financial gain. Now, if you enjoyed this content, make sure you smash up that like, and yeah, let's get into the charts right now. So taking a look at Bitcoin at the moment, this is kind of how I am seeing it right now. As mentioned, got higher than I expected. Fantastic for anyone who got in early in the market, was much more bullish on this year, has also locked in gains and made profits. It's great news. So Bitcoin got above 50k, we got above 52k in fact, and right now we are at time recording around about 52,200. I thought it would be an interesting weekly close. It was actually a little less dramatic than I expected. We did get a dip back into the 50k region on Saturday, but that again was quickly retraced. So those that are potentially calling a possible market top in here, a potential lower high on Bitcoin, may have been looking a bit more for a wick to the upside. We are on the weekly time frame on this chart at the moment, maybe looking for a bit of a top in tail, that we kind of seen over here and over here back in 2021. That hasn't actually played out yet. So the weekly chart, it still looks strong. We've still got some strong bullish looking green candles there. Yes, we did have the initial top here, which was the ETF hype, and then we had a drop, but then that again retraced and we've gone to new highs. Now you can see a similar thing potentially happened here. Maybe it was a bit less dramatic than we've just seen, and then it went back up to an all-time high. Again, down, back up to a high, of course not a current new all-time high. So bears will still be potentially holding on to that, thinking that maybe that was the last squeeze to the top. But as I've got on the charts, last chance for the bears. This really is the last chance now. I think any consolidation above 55k, we can confirm that Bitcoin at minimum is going to probably test the all-time high. Areas of resistance I've got on the chart, we get through here, we should be going up to that 58,400 if we get the 55k consolidation, and then the next attack will be that all-time high, looking for a new all-time high around psychological level of $70,000. So last chance for the bears. They've got to kind of drag this back into that 38k region, I feel here. That doesn't mean things are going to, flip super bearish if that happens. I even believe that if a sort of higher time frame, weekly, monthly top is in here for Bitcoin, or if we are close, even if we get rejected off 55k, I think we will see a drop back below 40k. That would still be a healthy correction in a bullish scenario, in my opinion. So bears need to minimum drag it back down to here, and then they'll probably look for a bounce, look for a lower high, and then hopefully for the bears, then a crash is starting and people will be looking to get in lower. However, those that filled up, those that have bet full chips on this bull market, that's kind of the area that they're going to want to defend. They'll know a correction's coming. We know a correction will come. It's just very hard to say right now if we are going to continue running up to 55 or even the all-time high, which is absolutely possible. On the chart again, I've got a potential channel that Bitcoin could kind of be operating in, but I wouldn't take too much from that. But you could argue that maybe we're kind of hitting the top of that channel potentially, and we would come back. More importantly, the lower line of this channel is kind of an ascending support. That's quite clear. We've got a couple of touches on it. Again, another touch, maybe could come back into that 38.5 region. Now, I do have a short currently open on Bitcoin. Stop loss is a little bit higher than we are at the moment, so that one's going to play out. Again, won't be taking a huge loss if that stops out, but I will be looking to kind of take profits on that trade if we do drop back towards 40k. Now, moving on. Ethereum a bit more interesting than Bitcoin, arguably at the moment, although it's good that it's finally catching a bid. I think a lot of people were surprised about the Ethereum price action, probably expecting it to be higher than it was once Bitcoin got back above 40k. It was a bit, it was a bit uneventful, especially when certain altcoins like AVAX, Solana, etc., and many others were catching more of a bid than Ethereum. So Ethereum's finally starting to take off here. We're on the weekly. Last week, very strong week for Ethereum, actually was up 14.5%, almost 15% there. Again, that's a very good week, and I believe just for the month of February we're over 20% up at the minute on Ethereum. So strong month for Ethereum. Again, I was kind of looking, and this is only the bearish scenario and really is the last bearish scenario left on ETH for a sort of weekly WXYX sort of 5-wave kind of correction here to kind of eventually top out here, and then we should come again. We've got this ascending trend line similar to Bitcoin. We've actually got more touches than Bitcoin, arguably, with Ethereum. So again, as long as that holds, it's still looking okay for the bulls. I did have $2,400 as that area of consolidation that I want to see for quite a few weeks here. So we're in that process now. So still looking good for the bulls. I've got $3,000 marked up as well, just because I think, again, that's going to be a key psychological level. Time recording, we're at $2,915 on ETH, so I wouldn't be surprised if we get dragged towards $3,000 here, and then maybe see a bit of a drop, a bit of a correction, or certainly a reaction at that psychological level. If we blast through $3,000, just like Bitcoin managed to blast through resistance last week, then things could start going a bit wild on altcoins here. If Ethereum disregards 3k and starts heading towards 4k, I think there's going to be a lot of hype again, a lot of excitement in the market, and a lot of good opportunities, especially on those altcoins that haven't really taken off yet, the ones that are only between that sort of 50 to 150% up off the current lows. Now, where you'll see a lot of that movement, again, we've got total 2 here. I've kind of got total 2 in resistance at the moment because Ethereum has moved and is again heading towards that psychological $3,000 level. Psychological level for the total 2 here, we're 900.5 billion time recording. You'd expect there to be probably a reaction around the 1 trillion level if we get there. Still nothing has changed for me in terms of 700 billion is the key area to hold for the high probability of this being a bull market. Again, for me personally, I'm more risk adverse. You guys know a lot of people want to just say it's a bull market, and that's fine. I respect that opinion. However, I like to see more time, more consolidation. So again, high probability right now, but we can easily get rejected from there and drop back below. We've seen this happen in these markets before. So not getting too super excited at the minute. I see us in an area of resistance to be getting through. Now, total 3, I've got this one slightly different, actually below the area of resistance that I'm kind of expecting, mainly because obviously this chart is not including Ethereum in terms of market cap. So I think Ethereum has started to get those bids, but the wider altcoin market hasn't still quite as a whole taken off as much as I would have expected. Not just myself, I think a lot of other channels, a lot of other people, a lot of anyone in the space, whether they're commenting on the space or they're not, they're just a retail investor. I think the vast majority of us, let's be fair, would have expected the majority of altcoins to have been higher, considering where Bitcoin and Ethereum is, but especially Bitcoin. Again, if you've got a different opinion, leave us a comment below. Always interested to hear all your comments and opinions. So maybe it's Bitcoin going up first, leading the pack. I'm not going to have a look at the dominance chart today, but you guys know it's still, comfortably above that 50%, and you could argue that it may still get a run up to 60%. However, it's looking a little less likely at the minute, with some lower highs being set. Maybe we'll take a look at the Bitcoin dominance on the next video. So yeah, Bitcoin might be running first, and then maybe these alts are gonna start to get a bid once the dominance drops. Again, that 457 billion approximate area, key area to hold. We had some good reactions. We've had some good strong weeks after getting the hammer up. So we're holding that at the moment, but are we heading towards this area's resistance? Only kind of basing this on these sort of candles here, where we've seen a lot of price action previously in 2022. So that is going to be the kind of next logical area to attack, in my opinion. And I still think what could drive this is, again, if Ethereum gets driven towards that 3K. I think a few of these alts that haven't quite caught a bid yet can probably push this up at least another 50 to 100 billion dollars. Now, moving away for crypto a sec, because I think it's important to look at this, because this is going to continue to be a story in traditional finance, in the stock market, and affecting all the markets at the minute, considering the enormous market cap. We are talking about nvidia here, and I just want to make a point. And a lot of people will be watching thinking, oh, this guy hates nvidia, he thought it was going to drop and it didn't, and it kept on running, and he said it wasn't a buy at $500 and it's now $700, blah blah blah. That's cool. Respect your opinion. My opinion is it still wasn't a buy for me. That's the only person I'm buying for, right? Because I think the risk reward is deteriorating here. Now, I did mention, obviously, Pelosi buying in, it was probably going to rise, which it did. That's all fun and games, politics. Take what you want from that. But the point I want to look at this chart, or what I'm looking at here, is that it has been, very parabolic in rise. I'm going to take a look at a couple of other charts in a moment that I just want to back up my opinion that I'm giving here. Is that history tells us that most of these parabolic moves drop hard. So again, from an Elliott-wave perspective, potentially, I've got two potential scenarios here. Either we are completing a 5-wave up in blue here, which may be completing soon, maybe nearly there, may run a bit higher, maybe can even still, attack at over $800-900. That is one possibility. Now, the other possibility, even more bullish, is if we're on the green wave count, where we are still looking to complete a 3rd wave, and then maybe there'll be a 5th wave later, taking nvidia above $1,000. And this is still going to take a long time. This is a weekly chart. Again, very hard to predict how fast. I mean, you can see how fast this moved up from November 22 to January 24. What we're looking there, about 14-15 months or so. It's pretty much been a straight line. Or likelihood, I don't think that's going to continue like a straight line for that, and then there will be a pretty healthy drop. So whether this is completing now in the blue count, there's probably going to be a significant potential multi-year correction here, and looking at the chart, any from a sort of 50 to 60% correction here is not ridiculous once that top is found. Now, if we're in the green count and we continue up, we could still see a potential 30 to 40% correction, maybe even more. You can still get a 50% correction in that wave 4 to then go to new all-time highs. So you could argue that potentially on the green wave count, that 4th count could look like a bit of a mini bear market. It will be pretty savage. It doesn't look like a huge drop looking at the chart like this, but in terms of price and percentage drop, it will be fairly significant. Point proven, that is, down here, wave 1 potential top in the blue wave count, we're looking about $70. We're 10x from that point. So again, don't kind of get stuck on the chart measurements. Always look at the percentages, the percentage drops. Now, moving on to these couple of other charts I want to talk about just to make my point. Okay, this is Cisco Systems. Again, very similar from its start in the early 90s all the way up to 1999, 2000. Very similar nvidia in terms of you've got that parabolic rise. Okay, then comes a crash, and again, people will be looking at this chart and thinking that doesn't look like a huge crash from where it's started. But again, you have to zoom in, look at the percentages. Again, at the top here, we're around about $85. Bottom of this crash, $8. Okay, $8. We're looking at over a 90% crash there. It's still a significant crash. So again, I'm not saying that's definitely going to happen for nvidia. We just have to be aware that these things can happen. And then what has happened next? 20 years guys, over 20 years in fact, we are still not at a new all-time high. So this is what a bubble looks like. Could nvidia be the bubble of our current age? Again, it's speculation. The whole AI space is speculation. Microchips have been around for a long time. We know there's a huge amount of money and a huge amount of importance to them, and a lot of people that are extremely bullish on the tech sector, the NASDAQ, new technologies, and AI being the head of that new technology. If you truly see that being the future, then it makes sense to keep investing in that. But there's been lots of things like the dot-com crash. We're still using the internet today. The internet is huge. The internet has grown into a huge beast. But in terms of speculation in the stock market, did that run too high? And did that not really relate to what it became? You could argue that maybe AI speculation is a little bit too high. Computer chip semiconductors are a little bit too high in what they are going to give us back in terms of the profit to earning ratios. This chart here, if you were looking at this chart, a lot of people would think they're probably looking at a crypto pump and dump. But again, this is a NASDAQ stock. This is super micro computer. This is on a weekly chart, and you can see again this thing has just gone absolutely parabolic out of nowhere since the start of this year. January we've got kind of price action. Well, even if you go back to May last year, we were at $100. Then we've literally done 100% pump within 6 months. But then since January to where we are, we actually did a 5x. We went from about $200 to over $1,000. But this way you got to be careful, guys. Look at the wick on this candle. Again, this is pretty much come from Friday. We've seen a 20% crash on this stock in one day. A 20% crash in one day. So again, the point I'm making is these parabolas are going to rise as they do, and then boom, if you are not out at the right time, if you have not taken profits when you should have, you are always running the risk of being greedy and holding on. So again, if nvidia, if other stocks, if other semiconductors turn out to be a bubble, there will be greedy people holding at the top. So that's just something I want to give my opinion. People think, again, being negative, being cautious, whatever, leave us a comment below. But this is just the way I see things. I know these things have run now. The opportunity to get in was earlier, and I think the gains are diminishing, or rather the risk is extremely, becoming a lot more, especially if profits aren't being taken. Now, moving on from that, DXY. I want to talk about the DXY because again, I still think this is interesting. Some people think this chart has gone boring. I don't. I think we've seen some good weeks, although the progress seems to be slow. We are building on these green candles, and we are continuing to rise. The DXY still, to me, is showing strength, but we can see where it kind of ran up to its highs in 2022. Obviously not its all-time high, but significant yearly high for quite a while. As the crypto market, as it stands, bottomed, and then we can see some correlation. It doesn't catch the exact top and the exact bottom, but you can see clearly DXY being low good for crypto, DXY being high, not so great for crypto. So there is some correlation there. It's never going to work out on the exact week or exact day. This is again weekly chart, but we can see some correlation there. Now I do think right now this is interesting because DXY is kind of in the middle, or we could argue a little bit higher, but from its bottom, from its top, we're in this middle now, around about 104. Crypto, you could argue Bitcoin closer to its all-time high. However, crypto market cap is also in that sort of middle range between its all-time high. It's about 50% lower. So interesting. So where this goes now, I think we are going to see a correction or a continued push on crypto. I still personally think this DXY is holding strength. I still think the next logical target is to try and take out this high at 107.4, 107.3 area, and then try and get some support there and attack. If that happens, it won't surprise me that Bitcoin maybe finds a top here, because we again have to look at Bitcoin has gone in a straight line pretty much up since it was around $25,000. So whether that's going to come with a potential double top on Bitcoin if we can get to that 69k, or if we start to reject now, either way, I still think the DXY continues its journey here a bit. I think it's going to catch a bid. If, however, the DXY starts to roll over here and we sort of lose the 102 region, I think this could very quickly turn bearish, and the whole of 2024 is going to look a lot stronger than expected, and maybe that comes with the surprise of some actual rate cuts and inflation going down on the next CPIs. That would be a surprise to me. I said watch out for the CPIs to start reverse. The last two the market hasn't really reacted or cared too much at the minute. There's been a bit of low volatility, but S&P 500 still being above 5,000 points. So there's not a huge amount of fear. We are still in a greedy environment. I think maybe the next CPI, if that one again is showing inflation start to rise, if the Fed makes some comments that we ain't going to cut any rates and maybe there may be a actual rate hike, then that's when these markets could start to get into trouble. Again, I still think property prices globally are probably going to correct. It will, of course, vary area to area, but I do see property prices going down. Now, S&P 500, I just want to make the point here. The last sort of major multi-year correction we've seen came from 2000 to 2009. It can be argued by many that it was a multi-year free-wave correction with an overshooting B-wave, that being the 2007 high, getting a little bit above where it hit in 2000 before the dot-com crash, which is your A-wave there, and then the financial crisis, 0809 being your C-wave. Again, we can call it a multi-year correction because that C-wave dropping below A, even though we've got the overshooting B. So that correction, multi-year correction, if you like, took 9 years. Now, we're always looking to learn in these markets, and I've been looking at this and maybe evaluating like my personal opinion on Bitcoin and how what did I get wrong or what should I have been considering, and there may have been some similarities in this. Again, I was very confident that there would be a bounce on Bitcoin, which we got from around that 16k region. I was always targeting around 20k from the top, and was aware that 12k was a possibility. So we landed quite nicely between that 12 and 20k, and I thought again we'd get the rise back up to 32. Of course, maybe I wasn't, considering the overshooting B wave or certainly a higher correction that we got, or where we are currently. If we are still in the multi-year bear market, which I do think there is still a slim, chance of. A lot of people think there's absolutely no chance of this. But again, I look back at these charts, history, S&P 500 here from 2000, 2009. I'm not saying it would happen with Bitcoin for 9 years. I would more kind of expect Bitcoin to play out between sort of 21 and 25. So maybe half of that time, or even a little bit less. But it's still a possibility. We have to be aware of this. Now, where the S&P 500's at now, again, if that was, that was rather, the bottom in 2009, again, those that use Elliott-wave, kind of hard, to kind of measure this out. But what we can look at this is that, again, we've had, we've had 15 years now to the upside. And we know that there's going to be another one of these multi-year corrections at some stage. Again, there's those that could potentially argue maybe it started in 2021, and what we are seeing now is an overshooting B wave. It's just not taken as long as this one did, and maybe that's what is playing out now. And then we start to drop down back towards 3K. That's a possibility. At the moment, it's still not my preferred count. Once we kind of took out the highs, I'm starting to feel that this is still some kind of terminal wave on the S&P 500 from the bottom, and eventually we are going to start a multi-year correction at some point. Again, always possible. You never know what's going to happen. Nobody knows what's going to happen. Could we get another flash crash caused by something similar happen to COVID? That can happen anytime. Nobody knows. But I'm still expecting a grind down. But what happens historically when we hit these new all-time highs? History tells us that we set a few more new all-time highs. We don't just hit one and then go straight down. What normally happens is historically we hit a few week after week, which we've started to do. We've done it a couple of times already this year. But again, psychological 5,000, we're holding it at the minute. If that drops and we significantly drop out of that, maybe something is happening to the wider stock market. Again, linking back to nvidia, Meta, Microsoft, these stocks are again right up. We know corrections are coming. Now, with corrections coming, Tesla got this one pretty well at the minute. It's possible it could be forming a head and shoulders. Maybe we get a right shoulder here before we drop. But either way, I'm fairly confident that this one is playing out at the minute. Again, just had some more news that the cyber trucks, the new vehicles, are actually showing some signs of rust. They're actually rusting. Again, the stock is going to fall on that. There's been quite a lot of bad news for Tesla recently, and that doesn't seem to be stopping at the moment. So I still believe if the stock market goes down, if these other stocks fall, I think we are going to see Tesla under $100, and then I would potentially look to build a position, because long term I think this one will do well. So thank you all for watching. Again, if you enjoyed the content, you haven't smashed that like already, please do smash that like now. And yeah, I'll catch you in the next one. Have a good day.